Do you want to minimize your regrets as an investor in penny stocks? Here are three blunders that you might want to avoid. Number one, not getting on top of the company. As an investor, you would have done a lot of research on this company. You know its history, management, and major projects. As time passes, though, the company's posture will keep changing. Some projects may be delayed, while others will progress. That was true of Chalice Mining. Its gold projects in Bendigo, Australia was not getting any traction, but it was poised to drill its untested Jolimar project in Western Australia, which are for copper, gold, and PGE, or platinum group of minerals. Why would one fail to keep on top of all this? He could be distracted, chasing every runner in the market like a driver who feels the need to chase every car that overtakes him on the motorway. That would be insane, but it happens to some investors. What's the consequence? They sell without revisiting the reason that they bought on the stock in the first place and failing to keep track of the share price catalysts for the company. That's the Chalice investor who sold at 15 cents in March 2020 just before the share price took off. Blunder number two, selling too soon, usually due to impatience. The causes of impatience can be stress, fear, and worry in any type of situation. If you feel like your stock is letting you down or not performing up to par, you can become impatient. If you've been holding for a long time, one can be fed up and just sell. In penny stocks, the share price do move very fast when they found a large discovery. In the case of Chalice Mining, it went from 15 cents to $1 within a few weeks from March to April 2020, following an announcement that they've hit the jackpot: nickel, copper, PGE, or platinum group of elements. Yes, the COVID-19 lockdown did not lock down the share price to achieve rapid growth. What happens next? It glided at $1 for 3 months. Having just seen a massive spurt in the past few weeks, this may create a new psychological tendency that is to expect instant gratification, expecting the stock to keep going. This is a massive trap for the impatient. He sells at $1. He may say, I've been here for 1 or 2 years, my 1500 is now 10K, I will now sell. After 3 months, the share price rises to $4. For someone who has managed to defy all odds at $1 and still holding, this can be the next level that will test his patience. Will it break his sanity? After all, his 1500 just 12 weeks ago was now worth 40K. The stock gets stuck for 3 months again, November 20 to 21. Some will sell, then the stock goes straight from $4 to $8.50. Blunder number three, not getting or selling too late, not getting on top of the Lassonde curve or life cycle of a mine. This means an investor is not paying attention to the big picture. An investor may be conditioned to think the share price will keep rising. After all, it started from 15 cents and was now $10. His 1500 is now 100K in under 2 years, and the company is still exploring aggressively. The Lassonde curve tells otherwise though. Eventually, the resource estimate is established and speculators run away in droves, driving the share price into a spiral. As you can see there, pointed by the blue arrow. That is the start of the orphan period. In the case of Chalice, the share price spiraled from $10 all the way to $1. Even though it recovers a bit, it entered the orphan period. The company is not expected to reach production until 2028. Don't forget, as the Beatles said, don't let me down. That's a reminder. So here are the blunders that you should avoid. Have you had any mistakes or success that we can learn from? Please share in the comments, and if you want contents like this, please check my other videos. Thank you.